Afternoon, everybody. Stan and Jack here, and we're doing Ask Us, which is a webinar that we do for subscribers in terms of asking questions. And by the way, there's a questions tab in GoToWebinar, and please feel free to go ahead and key your questions in. And by the way, this is about anything relating to the service. It can be about a specific instrument, like what's your opinion on bonds, or it can be what happened today on ES, or it can be, hey, that day trading video you put up, those indicators, can you tell me more about this one or that one? It can be about, I'm in a trade and I'm underwater, and what would you do at this point? It can be anything like that. So this is more or less, ask us something in your world that you have a question about, whatever it might be. And we're going to be here to share TA or answer the question related to an instrument or related to a indicator or something about risk management, whatever it may be. So with that said, Jack, is there something you want to actually do? Maybe let's you and I just have a chat about maybe one instrument, and that'll give people time to key in a couple of questions. And oil, I think oil has been the trade this week. Do you want to show a chart?
Yeah, I've got a couple of charts to show. If you throw me the screen over for a moment.
Okay.
I just want to show the oil chart on the 5-minute from today.
Okay, great. One I forgot, Jack. I'm sorry. Disclaimer: we do this for educational purposes. We don't issue trading signals. We hope you guys learn from this. So that's the disclaimer, and we're done with the disclaimer. So over to you.
All right. Now,
I'll pull up my oil chart too, by the way, just to.
Right now, I'm just.
Hello, Jack. Jack.
Yeah, sorry. Yeah,
lost your audio there. Okay, cool.
Yep. I'm assuming everyone's seen the bonus chart I posted for CL this morning. If not, you should have a look at it. Nice falling wedge for this thrust down from the triangle. There's a very, very good case that the triangle thrust is ending. I've got an RSI 5 buy signal fixed on the daily, and we had a beautiful move up today. And this move was in a rising wedge, and that was breaking down very slightly at the close. I think that's going to come back, and we are. What's the number Stan was using yesterday on CL? This is obviously USO I'm looking at here, which is
we're almost dead on the number. We're almost dead on at the weekly pivot and the falling channel that we talked about last night and also the day before.
It went almost to the target, stalled, and as you can see, the falling wedge is breaking down. Might do a retest of the high possibly, but I think basically it's likely to go down. And what Stan was talking about was then a return to ideally 40.6. That would be the right shoulder on an inverted head and shoulders. And if that then breaks up, then that takes us back. That basically delivers us the retracement of the triangle thrust, which I've got going back to about 46.5 on CL.
Yeah, that's about right. That's where the triangle started. Yep.
Nice move. I mean, basically that's $6 from the bottom of the right shoulder if we get to that area, which we don't necessarily do, but it is the very much the obvious target. We may well make it, and that's a $6 move there. And to be honest, we're expecting more after that. Probably more after that actually. So but I think as an initial move, that's going to be great. Oil is the most interesting trade today.
Yeah, I agree. And also yesterday and the day before, it's been the trade of the week, basically, in my opinion.
TLT has been, bonds have been one of the trickiest. Should we talk about bonds?
If you want to, real quick, sure. I want to get to questions too.
I posted this chart yesterday, and what I was looking at, just ignore the colors, which is just open gaps, with which we get a lot on TLT. This is what I posted. It's a perfect triangle, and I was posting it because we'd broken up from this falling channel. We were here on TLT, and I posted and just said I was out of my swing shorts because the setup was too dangerous to be short. Because of the triangle setup, and we were, if it was a triangle, which it was likely to be, then we were starting a leg up. Stan's thinking this is wave C we're doing at the moment. I was initially leaning towards wave D, but generally speaking, I'll defer to Stan on triangles. As a classical triangle, I'd normally see this as a wave D, because I see this as B, C, and we're in D at the moment. But if it's C, that's fine. Extra couple of legs will be absolutely fine. But obviously, this is a compression pattern, which then breaks.
Absolutely.
And this pattern will generally break up, i.e. it is a pattern which generally leads to a retest of the high, in this case likely to make the second high of a double top. So beautiful, beautiful RSI triangle, very nice, really very nice. And this is a nice setup. We've gone up, and what I would say is we had thrust up this morning, as is so often the case with bonds. Most of the move was actually overnight. That's very, very often the case. And during the day, you will quite often form a flag, which is what we did today. I retraced gently, and this is setting up for, I would have thought, probably another gap up overnight, which may well get us to this target. I've got a triangle on ZB as well, and I'm just aware that the triangle resistance on ZB is considerably lower than the equivalent on TLT.
Yep.
So I've got that about 174 on ZB. I think I'm mainly watching the TLT triangle, so I'm thinking it'll probably go a bit higher. Maybe that's 174.20 or something. It's but we'll be looking probably for a reversal somewhere around there. This is a good development. This gives us an opportunity to get back short at the all-time highs.
Yep, agreed.
So,
yeah, that's the way you got to look at it. I agree. We have a question about trading oil that I'd like to deal with on a chart, Jack. The question is, what is the ideal entry for those of us who missed the oil trade? So let's talk about trade setup. So first of all, if you missed the long, the obvious thing, I think you all probably see it, is this is not the place to get long, okay? And we have to respect that we could make a new low. Okay, it is not absolutely decided that we're not going to make a new low. That is in the cards, and if we do, 38.10 is the area, okay? You got to ask yourself this question whenever you're looking at an entry, okay? Where do I get in if I miss the trade? Well, what are you trading against, okay? So if you're getting long, are you going to trade against the low from here? I think that's too much risk, okay? So, I would trade against the weekly pivot. I'd put a stop above the weekly pivot, put on a short. You're definitely going to get something out of the trade. Now it's counter trend, okay, because we're thinking this is turning right here, so it's risky. Obviously, your best entries are always at the extremes. If you're here, as I said before, we're at the trend line. This could be the end. We could see one more leg down to the 100% fib. We didn't quite see it, right? So you put on a third or you put on a half, and then, you manage your trade accordingly if you have a little bit more to go so you don't miss the move, whatever. But we could do, as Jack said, one of two things, down here and then bounce higher, or if we are going to see 38.10, the character of the move, it's going to be a ripper. Okay, it's going to be one of those capitulation type moves, and we won't miss it. Okay, I mean, let's put it this way: you will certainly see it coming. It'll be like a trend day from hell. Okay, and we'll probably have a V-day, something like that. So, ideally, you want to wait for the lower low and get in the direction of the trend. And I'm really clear about this. Oil is going higher. A lot of people are bearish. And they're looking at all sorts of things, but I'm looking at the technicals, and I believe we're in this WX here on a daily basis. We're going to turn, and we're going to go places, okay? We may not get to 60, but we're going to get to 52s, in my opinion. So we'll see how it goes. So that's trading oil. Wait for an extreme. Use your stops appropriately. What's that?
Yeah, and we may go considerably higher.
I agree. The rig count isn't everything. The rig count, this isn't like where we were, 6 months ago. The rig count's starting to expand. Is the industry completely recovering? No, it's not. Will oil ever get back up to $100? Question mark. Maybe someday, but unless there's political unrest, in my book, not likely. So we'll see how it goes. Okay, so I think we dealt with that question. Thank you, Ed. Other questions that people have? There
is one thing I'd like to add to that.
Please do.
We spent a while today establishing support at the 40.5 to 40.6 level. If we actually go back to that area which would be the ideal right shoulder low on IHS, and we may well go back to that area, then that's a very nice area to short with a very clear support level, where if it breaks, you probably don't want to be in the trade.
That's a very good point. Very good point.
So what I would say is, if we go down and get that 40.6 level, by the time it gets to 40.3, you probably want to be out and watching again.
Yep.
So minimum risk entry, if we get there, is that.
So again, if you look at the previous swing, you get half of it. You take a third off, stop it even, okay, and let it play and see what happens. And take off your second third at Jack's level that he just mentioned. Okay, we are out of questions. One very good question, thank you. Are there other questions? And I'm going to let you guys, and by the way, I'll ask a question. Did anybody take a look at the video in terms of setting up for day trading and the indicators around volume and the indicators around using ticks to look at tape momentum, et cetera, et cetera? I don't know if you guys have any questions about any of that, or if you've had a chance to even look at the video, which is an assumption I'm making. See if there are questions about that. And while we're waiting for another question, Jack, I think someone's typing right now. So is there anything else you want to cover while we're here?
Yes.
Okay.
I think I just wanted to show something on gold.
All right.
And this
I think
gold
is another good one to talk through. Yep.
It's just another one, a good one to talk about. Let's have a quick look, because it's just struck me that we're not looking at this as this is far from a primary scenario, but it is something that should be borne in mind, because I know everyone's always looking for certainty, but the fact is there's always at least two scenarios, and the reality is no scenario is ever guaranteed. That's just not the way the world works, and it's certainly not the way the market works. I just wanted to mention this, right? In the event that we made a new high and got over 1400 with some confidence, in that case, we would have, I would alert you to this. This is a possible left shoulder. This is a possible head. This is a possible right shoulder, a bit undersized. We have a potential IHS here, which is broken up and done a perfect neckline retest, with a target in the 1570 to 75 area. In the event that it actually went up and ran away, this would be the scenario I would be looking at. So really like the reversal scenario here. It looks great, but in the event that it goes the other way, this is what you are looking at. At the moment, I'm thinking that we're probably going to go back and make a right shoulder on a larger pattern. If we don't, and we just bulldoze straight through there, then this is the other one that I'm looking at, and that is the alternate. So I just wanted to mention that. I mean, it's just so people bear in mind. You should always bear in mind the alternate scenarios.
I agree. That should help you actually determine where your stops are and what your risk is. I think that's the key thing about that. Okay, next question. I might have missed it, but are we expecting another low in the S&P before we head higher? You have the screen. Do you want to show a chart? I have a comment I can make if you want, or I can show a chart either way.
Actually, I covered this yesterday. I think I'll show it on the SPX daily chart.
Yeah, the thing I want to say is this: 65s are key. It's the weekly. We were at resistance today. I think we backtest from right here, and the backtest is going to decide it. 50 back if we find support, guys, and I put that out on the feed towards the end of the day. 50 back, we find support, we're going to a new high. Okay, so I mentioned on Sunday, this pullback is going to be quick and short, and it is far quicker and far shorter than I thought. If we see support there, if we don't, we'll make a marginal new low, and then we're still going to go to a new high. Okay, so keep that in mind. That's kind of how I see it. Go ahead.
What I would add to that is the way that oil and bonds are developing is favoring a new high in the near future. So I think if we're going to be pulling back tomorrow, I mean, you're noticing there's a significant correlation between oil and SPX over the last couple of days. If that persists, and I think it may well have another couple of days in it at least, and obviously, I mean, oil's down 20% in the last couple of months. Is SPX? No. So I mean, the correlation only goes so far. But in the short-term day-to-day basis, if you have a strong thrust up on oil, that does tend to favour the equity bulls. If you've got a strong thrust down, that certainly helps the equity bears. We are looking at if we come back and we make that low at 40.6 and we have a thrust up that goes up $4, that's probably going to help the bulls. And I was watching the correlation yesterday and today very carefully. It could break down at any time, but I've got to say, but with the triangle in ZB as well, there's an increasingly powerful argument for a higher high sooner rather than later, and then the main retracement starts. And while that retracement starts, I'd expect ZB to do the final thrust up and retest the all-time high.
Yep.
That would be a very logical setup. Now, just in terms of the bigger picture, I just wanted to show this. I posted this chart on my blog this morning, but I just wanted to underline this and talk about quickly what it means. What we are looking at here, and this is the move up from the February low, is I think if this high trend line holds, which I think it might well. If we make a higher high, I think it would probably respect this trend line. If not, I will redraw it slightly, and the quality of the trend line may well improve. It's only got 2 touches at the moment. We are looking at a potential rising wedge forming here, and what I'm thinking is, in terms of the weekly pivot, we should see a decent retracement here, 4% plus. It is absolutely begging for a touch of this trend line. That is absolutely the obvious target for the next move. So, I would expect, and if we do that and we bounce there, which I'd expect it to do, then we have a rising wedge forming.
Yep.
And
That's right.
at that stage, we've got a clear target. Now wedges can overthrow. You can't quite call it to the tick. Sometimes it'll go to the target and fail exactly there. Sometimes it'll be a little short, and sometimes it'll overthrow it. But at that stage, we've got a high degree of definition for what wave 5 is likely to end up doing. And that's a very nice situation to be in. So I think we're making a topping process now. We are going to be doing that 4% plus retracement in the near future. This is the target.
Yep, I agree.
I'll sit with the trend line on rut.
Okay. Let me share one thing about the pullback that I think we're going to see this evening, Jack, on the E-mini. Again, weekly pivot, we said last night 58s was A equals C, a 100% fib. So 3 back to 58 is what we did yesterday. And I said 58s have to hold and to see a new low, okay? We broke 58s today. So that's, first of all, clue number 1. Clue number 2 is weekly pivot is right now resistance, okay? Did you throw me the screen, Jack? I might have missed it.
I think I've got it. So hang on, I'll see if I'll throw it back to you.
Yeah, I just want to show the pullback area here because I think it's
just
important.
To mention while I'm taking over the screen, if we are going to be pulling back in oil, which I think we're going to be doing, then that is if we are going to see a lower low on this short-term retracement before we see a higher high, then this is exactly the time to do it. While oil is pulling back to the 40.6 area. So, and I think if we're going to see that happen, I'm slightly doubtful about that happening. It's they haven't pretty desperate tape this week, to be honest. But I mean, particularly in the afternoons, I'm wondering if the bears have got the energy. But if we see a lower low, what I would say is, if you look at my bonus charts for ES, NQ, and TF this morning, if we make a lower low with confidence and sustain it, then I've got valid head and shoulder patterns on all 3 indices. That could take us well through the ES monthly pivot.
Yep. Yeah, I believe my lean is higher at this moment. 3 back yesterday, 58s. Okay, we broke through 58s. We found the weekly pivot at 65s as resistance, as you can see here. This is setting up for a flat. My bullish scenario is this: we pull back 50% to the little box there, and then we're going to make a new high. Okay, the 50 back goes between the AB right there, that previous swing. Okay, that's roughly around 49.50. We see it. We see support. Okay, we're definitely going higher. Now we break the low here. Okay, we break 49s, for example. Okay, we open up the monthly pivot, which is at 36s. So for me, it's either A, which is the scenario you see, or it's B, we'll see the monthly, one or the other. 49s and 50s have everything to do with what happens next. So I would be watching that very carefully. So that's kind of the short-term view. I might have missed it. Okay, we did that one. Okay, gold seems to have made its move. Okay, I'm short now. Okay, great. I think we covered gold. Okay, you said it many months ago that the dog is the S&P and futures are the tail on the dog. Yeah, that's right. I agree with that. My question is, why do you focus more on the mini instead of the S&P? Well, I trade the mini. Okay, I day trade the mini. So, you know, for the most part, and by the way, the mini is a 23 hours a day type instrument, and it gives us clues very often for the S&P. I see overnight action, like for example, look at this overnight action right here on the mini. That high at the top of the channel was a clue, okay? And that's not going to show up on the S&P, okay? Because the S&P doesn't trade as long or doesn't have as many hours as the mini. So wouldn't the S&P be more reliable since it's the dog? It is often, by the way. You have to really look at both, okay? Which is what I do. So
I'd agree the same. All my trading is on the S.
Yeah.
I never trade high, but a huge amount of my analysis is on SPX, and that's because you can see most of what's likely to happen on ES through the SPX analysis, and certainly on the longer time frames, you're generally better off using the RTH charts rather than the futures indices, because the rollover really complicates the trend lines.
Yeah, I'm not a Globex trader by any stretch of the imagination. So, you know, what I try to do, AJ, and this is really an important comment, okay? I don't look at just one instrument. I think you limit yourself if you only look at if you only look at SPX and you trade SPX only. I think you're missing out on correlation. So looking at the NASDAQ composite, looking at the Russell, I mean, you know, the Russell has given us some great clues. Looking at NQ gives great clues. Sometimes a structure like looking at the S&P, like for example, you know, the triangle structure was very vague, but it's much clearer on the mini, okay? And by the way, you could see on the NASDAQ composite that there was a significant high made and really clear divergence, where on the S&P, it wasn't there. So I think there's something here about, make sure you look across charts and always try to look at the simplest instrument. I think I try to, I think you may have seen me do this, which is I'll find the easiest instrument to look at, which gives me clues about other instruments that I'm trading that are basically correlated. Not that correlation works 100% of the time, though. So I think that's important. Okay. There is sometimes contrariance. Oil goes with indexes and then sometimes not. Also, NQ does not correlate with ES, or Europe goes out. So how do you sort it out? Well, you don't sort it out. I think there's some correlations that are reliable and others aren't. And Jack, you may have some comments on this, but like oil and the mini, they don't correlate in my book, not long term. Okay, so I wouldn't be betting the farm on that one. I'd be betting the farm on looking at like the composite, the Russell, and the S&P together, and even looking at, for example, the other index that's really important is the Nikkei. Okay, the Nikkei is like, you know, if the S&P is the papa bear, the Nikkei is the mama bear. I mean, it's the second most liquid index in the world. And one of the things that gave me a clue, for example, that this low the high was coming, is the Nikkei turned. The Nikkei turned 2 days before we turned. It turned last week. Okay, so, you know, you see that, it gives you a clue. So I think that you have to correlate instruments that actually correlate. And I think there's a whole misperception right now in the market that, oh, oil's going to go down, so the mini's going to go down. I don't buy that one. I mean, longer term, I definitely don't buy that one.
Also, there's something else to mention. I mean, the reality is, if we're looking at this, you know, if you're looking at this move on oil that we're looking at now, and you're thinking, well, in that case, I'll go long. Yes, that's unlikely to be the right trade.
I agree.
The fact is, oil's been down. Oil has retraced 20%, while the SPX has actually overall been going up.
Yep.
You're liable to get caught on exactly that. The fact is, if you've got a really nice long setup on oil, you're generally better off actually going long on oil.
Yep.
So, and the same applies to any of these correlations. as general rule. One thing I would also say, if you're considering multiple indices, I mean, if you look at my comments on my bonus charts from yesterday morning, yeah, it was the Russell 2000 which gave yesterday's move.
Yes, very clear comment too, Jack. Very good.
Yeah. So and that is where a correlation is very useful. You can see, I mean, when I was talking about the 60-minute buy signal that was brewing and close to fixing on the Russell on TF yesterday morning, that was the warning that the bulls were liable to take the day. And this exactly did that buy signal on TF made target yesterday.
Yep, agreed. One other thing just to mention for Jorgen, the thing I want to mention is this: if you're going to try to correlate oil, look at the Canadian dollar. Okay, the Canadian dollar actually does it does correlate far better than anything else, in my opinion, and also the Kiwi is very good in terms of correlating with gold. So those are two to consider, I think, those currencies. And there's a reason in the market why they would correlate as well. So, okay, do you see oil and the index making a top simultaneously? No, I would count on that not happening, actually.
I am assuming that won't happen.
Yeah, me too. Can you draw the A equals C concept again for me? Okay, very good. Do I have the screen, Jack? I think I do.
Yeah, you've got the screen. You got the screen.
Let me go to a 15-minute chart and show you the A equals C that I commented on yesterday, okay? I think that's probably the easiest thing for me to do. So here we are at a turn, right? And we were expecting a bounce, and we were expecting a 3-back, right? And that's what you look for is a 3-back. So the A equals C concept is simply this. Fibonacci extensions, okay? There's your A, the first impulse. There's the B. And where does it end up? At C. Now, I may have missed a point or two here, but let me just clean this up for you so you can see what I'm doing. And again, the way I set up my Fibonacci is I'm looking at the 0.618, the 100%, the 1.236, the 1.618, and the 2.618. And there are others, okay, but those are principally the ones I use for different reasons. So I'm looking at the 100% fib, which means, by the way, the A and the C are equal. So that's where the term A equals C comes from, okay? And very often, sometimes they even are similar in time. In this particular case, they're not, but you can see where the A equals C is last night I was saying 58s, which I think if I did this more precisely, 58s is the A equals C, okay? Which means the A leg and the C leg are equal, okay? So it's a 3-wave back, A equals C, 58s. And by the way, if this is a wave 4, okay, 58s is where it should stop, right there at the 100%, and then find resistance, which we had at the close, right? We came right up to 58s, if you remember, and we rejected right at the close. And so you see that and you say, okay, maybe this is it, and you maybe put a stop on, you know, you put a short on and you hold a stop above 58s, and you get stopped out. I mean, that's what would have happened last night because we spiked up last night, kind of did a little sideways stance, and then found resistance at the monthly pivot. So the 3-back for me is dead. Okay, the 3-back for me is dead. I think 70% chance now is back test into the congestion here of the AB, okay, and higher. So that's an A equals C concept. Okay, we might be facing
I've got actually a really good example of a Fibonacci to show, which is really clear, and I think people would probably learn something from.
Very good.
And that's actually on here. It's on the SPX daily chart, and I just want to show this. We've got this move up from February, yeah, and obviously this, you know, it's just have a look at this here. We do this move up here, we break down, we make a low at 1991, and we move up. Have a look at this. At the moment, that low is almost exactly at the 50% fib.
Mm-hmm. Right.
And you see that a lot.
Right.
Yeah, and that is something to watch out for, and that is one reason why we're looking for a high in this sort of area. So it's just something to see, but the thing is, you can see here, that's 50% fib there. It's a very, very close match. It's and that is something that happens quite a lot.
Yep, I agree. And I think that's why we look for 50 backs, and very often it's in 3 waves and all that. This is a very interesting question, Jack. We might be facing a currency war. What will this mean? And I'm sorry, Jack, go ahead if you want to answer that one.
Well, I think to be honest, I think the fundamentals are taken rather more seriously than they really deserve. I think a lot of it's just rationalization of stuff would have happened anyway. I mean, let's look at the yen. I called it short in 2012, and then there's a great fundamental explanation of why it fell, but I was calling it purely on technicals. I wasn't paying any attention to the fundamentals. And then, August last year, that video I did, I wasn't paying any attention. Like I was hearing that it was due to Brexit. I wasn't even thinking. It didn't even cross my mind. This was just a pure technical bounce. You had a pattern, it would break up, you'd form a bottoming pattern, it would go to minimum 38.2, and I was thinking it'd probably stop there because the yen is fundamentally so weak. It's not really about currency wars. In terms of, is it going to be described as a currency war? Yeah, but what are we actually forecasting on the dollar anyway? We've been following this rise up from the 70s to on the index. I've got a target range, and stands is fairly similar of 103.5 to 107.5. Now we're talking about a very possible return all the way back to 70. That's going to look like a currency war. You may get people talking about a currency war. Will it be one? I don't know. I mean, to a certain extent, it's just the technicals playing out.
Yep. I would say the following, and by the way, Jorgen mentioned, for example, Bank of England today, and then it's the ECB, and then it's the Bank of Japan, etc. And I want to differentiate. Sometimes there are market responses or reactions to news, okay? That's different than market action, okay? So I think technically, and by the way, there are larger themes in the market. So in terms of currency wars, let me describe the one I see coming. This is what I thought you were talking about, Jorgen, which is, and you have to pay attention, everybody, to the presidential election. I think I mentioned this the other night. After the nominations are done, okay, there's going to be a news headline thing that's going to happen between here and the election. And let's say that Trump goes into the lead. One of the themes in the market will be, oh boy, Trump is going to change all the trade agreements. And that will cause a currency war. We're going to see the U.S. dollar get absolutely demolished, in my opinion, if we see that. So there are larger themes that are more permanent in nature that will, have a longer-term impact that will, that we have to consider as traders, okay? I'm not a news trader. I don't care what the Bank of England does. That's just a reaction. And by the way, the next day, whatever the trend is, it usually reasserts itself. So I don't lose sleep over what the ECB is going to do or what the Bank of Japan is going to do. They're going to do what they do, and I manage risk accordingly, and whatever happens, happens. But I think the larger themes in the market that could really create multi-year changes, I think those are things we have to be aware of as traders and factor into our thinking in terms of what may happen in terms of a scenario. Okay.
Something I'd add to that. The Bank of England thing today, a very good example. Now, from a lot of people will be thinking Bank of England cut interest rates today, and that's some more QE. Equities went up, and that's why bonds spiked. I'd already posted this chart yesterday evening. I had no idea the Bank of England was going to be acting this morning. Absolutely none.
Yeah.
And when I did the ZB chart last night, I still had no idea then. It was well before. I had no inkling that the news was coming out. I was just looking at this triangle. Actually, all we've been seeing is this triangle continuing to develop. It might be an awful lot of what we see in terms of, I mean, sure, it gave it a move along. Has anything actually changed on this chart because of that announcement?
Nope.
Not that I can see. No. An awful lot of the cause and effect you see is just people taking what happens and then, what happens in terms of bank actions or whatever, and what happened in the market, and then tying them together and cause and effect.
Yeah.
It doesn't mean they are cause and effect.
Yeah, I think we as human beings, we always look for how can I say this? We have to fill in the blank. Okay,
yeah.
If something happens, we have to have a reason for it happening. And so that's why CNBC exists, and that's why Jim Cramer exists. Okay, those people always find the reason for what happens in the market, and it may not necessarily be the case. Okay, we always look to fill in the blank. Why did this occur? But And by the way, there's also the case that, as Jack just mentioned, you know, sometimes technical analysis and the news, it actually plays out into the analysis, but there's also the opposite case, which is like gold, for example. We said we were in a flat, we were going to go higher, and then we got a news announcement and it exaggerated the move. By the way, is that going to change the forecast? No. We're 7 points over the move that we expected, but we're still looking lower at this point. At least I am. And there's a possibility, as Jack mentioned, we could break the new highs. We have to keep that in mind. But you know, I'm looking at a low window here. We'll see what plays out. So sometimes the move is exaggerated by the news, but it doesn't necessarily change the structure of the market. So I think we trade off of price action, structure, and time. Okay, I think those are the three things we try to, at least we try to balance it, Jack, you know.
Yep.
Okay, I used to be fundamental, firmly. Believe now that charts lead the news. Yeah, okay, very good. I used to be fundamental too, and I don't trade fundamentals much at all. I do look at the larger macro themes. I think that's what I try to pay attention to more than anything else. Okay, Jack, I think we're out of questions at this point. If anybody else has a question, anything else that you want to cover?
No, I think that's about covers it really.
Yeah, I think that's it too.
I just wanted to have a quick look at you know, the main things I've been focusing on today are bonds and oil, and we covered those pretty thoroughly.
Yeah, I think oil's been a great trade. I think it's going to continue to be a great trade. I would expect more volatility in oil over the next week or so.
Yeah.
Okay, so I guess what's weekly in oil for my stop? Okay, let me quickly give that's. It's not far. I mean, that's why I mentioned it as, you know, what are you going to trade against? Hold on a second. Oil, the stop is 42 above 42.18. Okay, 42.18 is the weekly pivot, so I would expect that to be resistance. The trend line is right there too, by the way. So that's the level. How far above you go is about you and the size of your account and what kind of risk you're willing to manage. I guess that's it, Jack. So thank you, everybody. Great questions. Great pleasure as always, Jack, doing this with you.
Pleasure as always, mate.
Yep. Take care. Bye-bye.
Take care.